well. Both Malaysia and Singapore are described as having a territorial tax system. But this is not technically 100% true in that there are circumstances, generally speaking, where foreign derived income can be subject to tax. Comments. And let's start with Ravi. Ravi, what are your comments on that? Especially Malaysia's had quite a few changes, as I understand, within recent times. Territorial tax, Malaysia.
Yes, Dan. It's what you're saying is absolutely correct. Okay. There have been a lot of income tax cases in past years that income tax has been disputing the income remitted back to Malaysia, whether it's a Malaysian source or overseas source. There have been a lot of cases in the court cases running all these years. Most of the cases, income tax tend to lose the cases technically because there is no, clear guideline in the act to put a line, say this is, you fulfill this condition, there's no tax. If you don't fulfill, it will be taxed in Malaysia. So it's always been a gray area. So saying that also, taxpayer has been taking opportunities, I can say that also, bringing money into Malaysia without paying tax in overseas also. That means they don't pay in tax in overseas and don't pay in Malaysia. So as far as concerned over here, the law doesn't say anything that it is not taxed in overseas, it should be taxed in Malaysia. It doesn't say that. So taxpayer has been taking this as an advantage at their point. So always court case goes, all these things comes. So the point the income tax will look at it is where the work is done, the job is done, where it's concluded, all these tax they will do before they conclude. Okay, so all these things are happening technically. So since this thing has been a gray area, and income tax saying this is a big issue and a lot of revenue being missed out or lost for the government because of this shortfalls in the rulings. So they have changed the act since 1st January 2022 to overseas income remitted back to Malaysia is taxable in Malaysia. Is taxable based on receipt basis. Okay. So, however, once they came out with this ruling, there's a lot of hoo-has with the taxpayers and the general business community on this. So after that, they give some concession and they give some relaxation. One of it is for the first 6-month period from January until June, whatever amount remitted to Malaysia will be taxed at 3%. Okay. Following that period, the tax will be based on the prevailing corporate tax rate the company have to pay. Okay. Then for individuals, they have give exemption on foreign income remitted back to Malaysia on all income until 2026. This is Malaysia tax resident only. Non-resident, they can still bring money to Malaysia. It will be tax-free, still will be tax-free. This is for Malaysian tax resident only. And further to that, dividend income also, this is for corporate, for dividend income, corporate dividend received from overseas is also exempted, but they have put certain condition on this. One is the baseline tax must be at least 15%, and some of the condition is now, recently they put another condition saying that the dividend that you receive from that company, they must have a substance. The company must have substance. That means that it is not a it is not an intermediate company, without anything, just transferring the money. It must be a company in operation doing a real activity that transfers the money. So we have this issue. So as what you say, yes, the definition is a territorial tax is no longer stays. So it's going to be taxed everywhere. We have to look.
Okay, so just to quickly summarize. So the first thing is it hasn't changed. If management and control, if it's a company, or if the economic activity, if it's a person or whatever, is being exercised within Malaysia, even though it's collected outside, the point is it's taxable to Malaysia, because in the situation where management and control or some sort of economic activity is being exercised within Malaysia.
Yes.
However, it's in a period of transition right now where so the dividends piece, I think that's straightforward. There's a minimum tax above which, yes, it can be remitted free of charge. Otherwise, it'll be subject to tax. And then you have the idea that if it's a shell company, that doesn't count.
Yes.
There has to be real substance, economic substance in some of the jurisdiction. for the dividends to come in. Now, in terms of other types of remitted income, it will be subject to tax, but it's going to be phased in over a period of time. Okay.
Yes.
So right now we're looking at 3%, but eventually by 2026, it will be whatever the prevailing corporate tax rate is, which roughly is around 25%.
Yes. The other thing, Darren, when Bunip's reply this also, I just want to Bunip to clarify, because what I heard is Malaysia currently is their remittance basis is purely based on remittance basis. Okay. I heard Singapore, they also have a provision of set off. That means in Malaysia, the money must actually come to Malaysia, then only you tax it. Crediting the amount, knocking off with accounts is not counted as for tax. But Singapore does have that provision saying that also is counted. I'm not sure.
Okay.
Yeah, okay. Generally, Singapore and Malaysia, the tax system is based on UK, so they share almost the same principles. But I would think Singapore is a lot easier. So in terms of foreign source income, there are three categories that you can have tax exemption. There is a dividend, foreign source dividend, service income, and also branch profits. Right. So what happened is, obviously you have to satisfy criteria. So there are three criteria that you have to satisfy. So being taxed already in the overseas jurisdiction, and of course the headline tax must be 15%, and also the controller has to be satisfied that is not at the expense of the Singapore tax. Right. So the taxpayer, so these are the main criteria, the three main criteria that you have to meet, all of them, in order to have those income exempted from tax. I think it's fair and equitable, because if you look at the basis of Singapore is, they always say that you wouldn't be taxed twice, right? So say, for instance, dividend is always first year. So you will not tax you another time, unless the dividend has not suffered any tax in overseas. So which is why you must first suffer the tax, and the headline tax has to be 15%. And nowadays, I think 15% you would hit all jurisdiction except tax haven, right? So I think this part is very clear in Singapore. But there's a gray area also. I personally feel that often I had an inquiry from clients. Back then, I think 2 weeks ago, I had one. They were asking, if I set up a company in Singapore, but all my trades, the management control, everything else is offshore. So nothing except Singapore company. Even the bank account is not in Singapore. So do I exempt from tax? The answer is no. Okay, it's no, because they are in trade. So actually, it's a real company. So what happened is this group of people, they are from Australia. So they are thinking to do some restructuring. Obviously, they are not thinking to evade tax or what. Primarily, it's just to consider Singapore jurisdiction. But they heard about if you have a Singapore company with everything else offshore, means you don't have to suffer any tax. But that's not true. Okay, that's not true.
That's not true. And that's an important point. I'm glad you raised it, because, I don't want to call their name, but there's another big service provider with a very strong online presence based in Singapore that has been selling that online. So what they've advocated is, if there's no bank, there's no economic substance in Singapore, then the company is zero. That they've said this online, but you're saying that this may not be technically true sometimes.
Yes, as long as they are in trade, okay, so it's definitely subject to tax. But there may be somehow a twist. So depending on how they sell it, so it could be service income. They were in service industry, and it's foreign source. Yes, probably yes. You may not subject to tax in Singapore. So I don't know how they sell it, but if you are in trade, a Singapore company, definitely you suffer a corporate tax.
Okay, understood. So just to kind of summarize, you're correct. So the regime, so both, as correctly pointed out in terms of the heritage, both derive from UK company law, Company Act. So they both have the principle of management and control, first and foremost, and they all have the idea of the remittance basis of taxation. except that there are fewer exceptions for Singapore.
Yeah.
And there are perhaps more exceptions for Malaysia. So, in Singapore, it's absolutely sacrosanct. Dividends are tax free, provided they've been taxed elsewhere, minimum 15%. But, again, other remittances, they will be free of tax, provided they've been taxed somewhere else, right? And of course,
Yeah.
proper transfer pricing, if it's a related party transaction as well.
Yeah.
Right.
Irrespective of whether you remit, but if you are in trade, it's subject to tax.
Okay. Yeah.
Okay.
Okay. Right. Gotcha.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.